You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, unless you've been floating on a raft in the middle of the ocean, you're probably very familiar now with the concept of inflation, stagflation, higher interest rates, stock market decline, stock market volatilities, markets all over, even commodities taking a hit, and they have been the leaders. Well, Ken Van Liew is with us now to explain what he sees coming next in real estate. Ken, you've been a real estate professional for many years now. If I got it right, I think you're close to where I grew up in New Jersey.
Yes, sir. Kerry, how you been, buddy? It's good to see you.
Great. Good to see you too. So interest rates going up, 5-6% mortgage interest rate. How does that affect what you're doing? How does that affect the real estate market in general?
Great question. From someone who comes from, the late 80s era where my first house that I bought, my interest rate was 18%. It doesn't necessarily alarm me, in the sense that people should be overly concerned. I think at first it's a little earth shattering at times when, people are coming out of the impact of COVID and, everything and their brother is 30% higher, not only gasoline, food, you hear it all over the news. So people are panicking in the sense that, hey, their mortgage rate or mortgage payment each month's going up. But, if you look at the bright side of it, I do believe that, the good news is with the shortage of residential homes, from a residential perspective or homeowner perspective, it may be a little concerning now, but over the length of time, I truly believe that real estate's going to stay consistent and raise in value and not really panic about it. Excuse me.
All right. So we got a housing shortage, but it's debatable how extreme that housing shortage is. Is it a function of people holding back their homes, keeping them off the market because they're appreciating so quickly? Who in their right mind wants to sell your home into a rising market? Maybe when now that they see the potential valuation increases are over, then you're going to say, well, maybe now is the time to take my profit, right?
That is true, and I also look at the other side of the coin that I believe, some of the numbers that are floating out there could be, a misnomer in the sense that, the government has given such relief to people. We really haven't seen the tailspin yet and what may come available. I also think, there's several different sides of the coin that, with the whole change in the commercial work environment, that people are changing their living and housing strategies, So, there may be shortages in certain parts of the country and not in others. So, I think a lot of it, I think we're rubbing the same crystal ball and not necessarily getting, any direct answers, Yeah,
well, the crystal ball, like the future, is very cloudy right now here.
Exactly.
A lot of fear and a lot of, now it's, there's no longer FOMO. It's like FOSO, fear of surviving out the decline, right?
Yeah. It's interesting. And I'm glad we're talking about this because we're getting ready to put together a documentary on, real estate today and keys to investing and how, the whole environment is changing, and I think, we're talking about something where we don't necessarily know it's real. Because one of the things I think we've chatted about before, we don't really know what the demographics are saying these days, because you never know where someone really works or lives anymore, So, are we making moves and creating this, frenzy where everybody and their brother wants to, take advantage of the baby boomer opportunities and convert, the struggling hotels into multifamily and affordable housing. And, I have people in my arena and I'm like, guys, let's investigate it, but don't jump to any conclusions,
Yeah. Yeah. Well, we got the Great Resignation, but you make the point of working from home, those stocks were up until recently, the stay-at-home stocks were like performing phenomenally. But now, you're working from home. You don't have to commute. There's a lot of pluses. Even if you used to have your own private office, you're a professional, that's saving you some money now. So our work pattern's definitely changing. We got a great migration in this country taking place from, I could come up with a lot of adjectives for these states, but let's say states that are not so desirable for a number of reasons, mainly located in the northern part of the country. But, then there's California too. But basically your state, New York, Michigan, Illinois, Connecticut's worst. Massachusetts, to some extent, less desirable. And where are they coming to? Down south. So if you're a real estate investor down south, do you think interest rates are really going to matter at this point if you're looking to buy a home in Florida?
I really don't believe so. The funny thing is how I used to teach a lot relative to hard money lending, when we were, doing some residential testing out the modern wealth building formula, it didn't even matter to you were paying 3-4% more than, what a normal construction loan would be. Back in the day, when interest rates were, in the 5-6s, you can get a construction loan for 8. And when you get hard money, sometimes you're at 12 and 14. But if you're turning the money over so fast, the interest rates are sometimes negligible, if depending on what the outcome is, So as we look at interest rates in certain contexts, if you look at it in the context of a 2-income family or a 1-income family, it's a hell of a lot different than someone, who's fixing and flipping or buying commercial real estate where, a point or two doesn't necessarily kill the deal. I mean, if the thing swung 10%, then maybe it's a different conversation,
Sure. Hey, so what about this trend I would call the Airbnb-fication of properties of all description, especially in Florida here, single family homes, even some condos if they can get away with it, even if there's loose HOAs and your neighbors aren't going to have a conniption over you renting out to strangers, right?
Yeah.
We've seen, and this is just like all over the country and all over the world here, Ken. Can you play that trend? And what effect does a potential recession have on that Airbnb trend? I should call it, by its generic term, the short vacation rental market.
Yeah, exactly. I was just going to say, it started out with this Airbnb thing, and then, that created all kinds of friction, with certain states. And then you have, the short-term rental, which is just went off the hook, right? Which now impacts hotels. And it's funny because the trend I noticed in my neighborhood, this truck, it's called the Wonder Truck. And you get all these like famous restaurants throughout the country, and the truck pulls up in front of your house and cooks this phenomenal meal for you. Well, what it's doing is it's putting restaurants out of business,
What is the name of this? I'm going to order this. What is the name?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Well, it's called Wonder, and it started in New Jersey. And I found that, a lot of towns have been complaining because the truck pulls up in your neighborhood, it cooks a meal. They're now expanding into 200 trucks. But, I'm saying this because what we're talking about, there's a lateral effect similar to what just came through me when I started talking about the food industry, because, everybody's struggling, and, you now have this work environment that's changed, so, companies are having to pivot, how their expenses are being spent. You now have, companies, creating things like, hey, I'm going to deliver this, first class meal to your living room, and you don't even have to go out. So now it's, causing restaurants to struggle, and there's a little bit of I would say a reproportioning of what the heck's going on right now in the industry itself, along the lines of what you were just saying, but short-term rental, it's funny because I'm like, I got to sit down and think about this because it's almost like a tsunami wave, and I said to everybody I talked to was like short-term rental, and I haven't thought about it enough on, other than, will it get saturated? Nobody really knows, nobody really knows yet. So I think once again, everybody's looking for the quick buck.
Okay. So you always hear all these crazy stories, Florida man, Florida woman, and you hear these crazy Airbnb stories. So here we have some wacko in Escambia County in Florida. I'm like embarrassed to say the headline: mostly nude Airbnb renter assaulted disabled man over age 65. So says the Escambia County Sheriff's Office. Not the most artfully written headline, but I'm too expensive for the North Escambia News to hire to write a decent headline. But you kind of get the idea. You got a lot of whack jobs here. In certain states, if they stay more than 30 days, they become subject to rent regulations, and then you can't just toss their ass out onto the street when they start walking around naked in your house, in front of your kids. And so there are negatives. But the other thing is Airbnb isn't really new. In Florida and like Jersey Shore, in vacation areas, you had short-term vacation rentals of sometimes a matter of days, weeks, a month or two, a summer. They're not new. The amazing thing is that Airbnb enabled anybody with a empty closet in their house, and a bed in it. You could rent out a room and defray your rent. It was great until New York City cracked down on it because those outrageous rental prices there and condo prices, you could start getting it back. But, all that glitters is not gold. There's definitely issues with it. It's a service-oriented thing. But what happens with high rates with a recession? Do people just lower their asking prices on their rooms, and that's how it works?
Yeah, a great question, and I think that was the first question that I may alluded to, but will it cause a recession? Will the industry get saturated? I think, and you may have heard me say on some other stations, what's going to happen to malls? Are malls going to be an avenue for residential destinations? What's going to happen to the vacant office buildings that had an asset value of 200,000 and went to 20,000? What's going to happen? In this industry, but I think, it kind of, and the other side levels the playing ground in the sense, like you said, it's not necessarily every Tom, Dick, and Harry. It's that people now can live, the American dream with an asset that they already own, which is a good thing, maybe one of the good things in the last 3 years, with what's been going on. And, now we have all the peripheral action going on from the Russia stuff, but it just seems like there's always going to be something out there, Kerry, that we're dealing with, but, I don't necessarily feel there's going to be a recession in the sense, at the level of 2008. I think we're at a high where there's going to be an adjustment, but, I think, one of the things that you mentioned earlier, that now that people are maybe reducing some of the expenses of getting to the job every day, or not paying for that $300, commuting ticket or spending gas parking, maybe there's a little bit buffer to kind of weather the storm,
Yeah. Well, it's interesting. And then you got like Uber, it's all kind of it. It's all the technology that has turned every person into a wannabe taxi driver, basically. It's all the technology, but did you ever think, you've been in this business so long, you're not that old, but you've been in here a long time. And did you ever think you could just have an app and just rent a room in somebody's house or rent an apartment for like 3 days, just go there and like the price of hotels has gone up so much that the Airbnbs, even though they've gone up, haven't gone up nearly as much. And generally Airbnb owners don't nickel and dime you for, oh, you had a bottled water, that'll be $10, right? And, oh, that shampoo, it's no longer free, put your change in the slot there. You don't get nickel and dime there, right?
Yeah. It's funny you say it because, the VIP experience for people is something that everybody wants, and I have experienced it a few times, and it's been very pleasant. Just recently I picked up an Airbnb when I was down in the Orlando area that, was nice. Everything was, like a hotel. They had, all the guides you needed. The pool was next door. And if you're going to get that type of experience and have a little bit more seclusion, the hotels are going to get a competition, and I think change is good. I don't know necessarily if anybody really gets totally hurt from it, kind of like I said, balances things out a little bit, levels the playing ground.
Yeah.
As it's challenging these days for younger people to get started, for a lot of the reasons we're talking about,
Yeah. Well, you do have an interesting phenomena too in real estate of the Airbnb rental arbitrage, where somebody rents out an apartment, condo, house with the sole intention of turning it into an Airbnb. And if you're smart, you tell the owner, look, I'll give you higher rent, 10% higher. I'll fix any damages, repairs, and then you arbitrage the rate, and you don't even have to own the place, right?
It's amazing what you just said, because I've had a couple clients in very, very hot vacation areas, and you're obviously familiar with the Hamptons, right? One of my clients picked up a house that they wanted $5,000 a month, so he rented it for the year. And then during the season, he charges, upwards of $15,000 a month, and he gets it back in 4 months. He pays them $60, he pockets $20, and he maintains the house for him. So he basically has the best of both worlds. He doesn't necessarily have an asset that he has to worry about in case a flood hits, Meanwhile, he's making an arbitrage, that pays for his college tuitions, kids' college tuitions,
So I guess what we're saying here basically is that that real estate has changed. Even though rates are going up, opportunities seem to have never been greater. And, there's still ways to make money here.
Oh, there's no question about it. I think, both of us have experienced that. It's almost the guru syndrome. Like everybody's trying to jump on the news or something's happening. It's never been like this before, when in reality, it's the cycles we've been through over the last 30 years. There's a couple different variables, but it's always the same, up and down, and then it continues to go up. And, I think we're just, coming out of a little bit of a roller coaster. I don't think anything's going to blow up right now. I really believe that the key is keeping everybody with a positive mindset and getting rid of the residue from what just occurred over the last couple of years.
Hey, just remember what Will Rogers always used to say: ignorance got us into this mess, and ignorance will get us out, right?
Exactly.
So,
well, I love you, buddy. You got all those old sayings.
I collect them.
Give away our age,
I'm a quote collector, man. I got tens of thousands of them, and they just pop out at exactly the right moment.
Right moments, yes.
Sometimes. So, Ken, people want to connect with you, find out more about what you're doing. How do you do that?
KenVanLiew.com. Go there. Anything you want to find out about becoming a real estate expert, is right there. KenVanLiew.com. KenVanLiew.com.
And of course, as always, there's a link to Ken's site in the show notes of this interview on financialsurvivalnetwork.com. And make sure while you're there, you sign up for your free newsletter. Ken, always a pleasure. Thanks for sharing your sage advice and wisdom, as always. And we will talk to you again.
Thank you, Kerry. Make it a great day.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.